Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday, happy Aloha Friday as we say on the islands, June 16th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen with this month's FOMC meeting coming to a conclusion on Wednesday and the repercussions of statements made and policies implemented just getting absorbed into the market. We have seen gold and silver trade under pressure for the better part of this week, actually the better part of the last couple of weeks. Although gold is trading higher on the day, it is lower on the week. Gold futures currently closed at $12.5520, putting it up about 50 cents on the day. It traded to a low of $12.53 and a high today of $12.5860. So as you can see, we are much closer to the lows than the highs. Silver did trade lower today and actually has been trading under a much greater pressure than we have seen in gold, down 4 cents at $16.67. Although gold closed nominally higher on the day, up 60 cents at $12.55, it absolutely closed lower on the week. Now for the second consecutive week, these are weekly candles of lower pricing ever since the market failed to take out that elusive $1,300 per ounce. And so the question becomes, where could we see gold trade to from here? I've just gone ahead and pulled up a daily candlestick chart, and there's some key levels that we certainly want to focus in upon. The first thing that's extremely noteworthy is the fact that yesterday's trading activity took the price point of gold below its effective 50-day moving average, which currently sits at $12.61. Today, although we did not get a lower low, we did get a lower high, and we closed, as I said, a little bit higher than the day before, but fractionally at best. My sense is because we have broken below the 50-day moving average, the momentum is still got to be to the downside, and the next real level or target that we need to look at is 1246, and that is a 61% retracement. And the retracement that we are looking at is fairly short term, in which we had this last rally go from $12.13 up to almost $1,300 per ounce. Now, traders, the next study that I want to look at is the same daily chart, although we have converted the candles to Japanese average candles, because what I'm attempting to determine is we do know that we are in a defined downtrend right now. And the Japanese average charts will really give us an indication of strength of trend. In other words, how much power is behind this current bearish sentiment. Now, based upon the most recent candles, what we see is that there is no upper wick, and the body size of these last two candles is relatively large. What that tells me is that the bearish market sentiment that was prevalent this week not only should continue next week, but should have some continued momentum. Therefore, traders, my recommendation is to continue to have a neutral stance. We have no active trades on. We will go into the weekend flat, and we will look at how gold trades next week to determine our next move. In other markets that we follow, U.S. equities are still trying to parse information received during the FOMC meeting. We had the Dow Jones Industrial Average close up 24 points at 21,384. We had the Standard & Poor's also close higher on the day. However, it was the NASDAQ that closed fractionally lower, closing at 6151. Traders, statements made by the Federal Reserve in their press release were revealing, because they, for the first time, outlined the scope and magnitude of the Federal Reserve's plan to liquidate much of its assets from its balance sheet, along with the timetable and caps. However, I think that the most important component is, first, the fact that this could be implemented this year, and secondly, that once implemented, this would be a monthly endeavor by the Fed. Now, consider this. If in fact asset liquidation by the Fed, which is commonly referred to as a stealth hike, does ratchet up interest rates, and this ratcheting or increase of interest rates happens on a monthly basis for the next couple of years, what will be the net effect of where interest will be 16 months or 2 years from now? These are definitely unknowns and uncertainties in the market, and even the Fed is on record as stating they don't know what the net effect is going to be as they go in and set up this asset liquidation, because it's never been done. I think we're in for interesting times, to say the least. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.